Alright, today is Tuesday, August 18th, and this is a post-market review for the stock market activities today. We will look at the closing analysis, the sector's performance, the futures performance, the options market performance, and important headlines that shaped the day, the heat map analysis, the charts analysis, and then we will conclude with an important conclusion because of course today we hit all times high in the S&P 500. And here we go, the Dow Industrial Average closing in the red by 66.84 points or a decline of 0.24%. The Nasdaq leading the day closing in the green with 81.12 points or 0.73%. And of course, the king of the day is the S&P 500 closing in the green by 7.79 points or 0.23%. All times high. Yeah, let's celebrate. And now to the sector's performance. For the gold medal is consumer cyclicals, the silver goes to communication services, and the bronze to tech. And of course, the laggards were led by energy, industrials, and financials. About the futures market. The futures market, you see orange juice rallying along with coffee. Coffee had its pullback and now it's rallying again. What about lumber? No stop in sign. Yesterday we called the top. Lumber says no thanks. I'm going to keep going on and on and on. No stop in sign. And look at precious metals rallying by a little bit today, but most notably, of course, is copper. Copper rallies as long as the dollar is taking a hit. The dollar took a hit today, and you see copper rallying. And I released this tweet reminding people why I'm investing in copper, specifically in Freeport-McMoRan, FCX, the largest copper producer in the world. Copper is a big hedge against the decline in the US dollar. Of course, saw the British pound rallying today, and for the decliners, lean hogs took a big drop today, reversing all the gains it had since the bottom. And here we go, sugar pulling back for a little bit after an incredible rally, and wheat, of course, declining today. What about the casinos? Switching to the options market, Apple, Tesla, Walmart leading the day by volume. Apple 65.5% for calls, Tesla 63.2%, and Walmart 76.8%. The gambling continues and goes on, chasing the stock split mania, and now of course they gambled on Walmart last night. It didn't work out today, then gambling a little more. And of course some notable names here is Oracle with 88.8% for calls, of course chasing the whole TikTok thing. Oracle is a boring stock, it's seldom hold on to any gains. So these are amateur gamblers and they're gonna have a rude awakening with this stock, because it doesn't move big at all. And you see GM is catching a bit. There's a lot of positivity with GM electric vehicles. Nvidia, 70%. Of course, we have earnings coming up for Nvidia. And now, shifting to the headlines that shaped the day. We had some earnings today from Walmart, and Walmart pretty much said that the stimulus checks and all the unemployment benefits, of course, contributed to its very strong earnings. However, they saw or noticed that sales dropped once the stimulus was over and once the unemployment benefits got cut off by the federal government. Home Depot reported earnings today, and of course sales are up 25%. If you've been going and shopping in Home Depot, or I prefer to go to Lowe's, you know the stampede and the mania that happened the first month of the pandemic. everybody started doing home projects, of course, and here is the result. It is, of course, doubtful that we will see this momentum continue in Home Depot and Lowe's for next quarters because the stimulus and, of course, the unemployment benefits are gone and people are pretty much through with their home improvement projects. And of course, we have Kohl's. Kohl's had a pretty bad picture, closing some stores and warning that the holiday season would not be as good as expected. It would be pretty much abysmal. And we have another retailer from overseas in the United Kingdom, Marks and Spencer, had a pretty bad news, of course, laying off over 7,000 workers. So the picture of unemployment and laying off are not just secular to the United States. You see here the United Kingdom getting hit as well. Speaking of the poor and unemployed and all the suffering, let's check on our oligarchs, our billionaires. Are they doing fine? Are they doing all right? Because God forbid. And of course, they made more money since the pandemic, since of course the March crash in the stock market. They've made more money than they've ever made before. They are doing just fine, while people line up in food banks to eat. And of course, the biggest winner is Elon Musk. Elon, of course, benefiting from his cult, just like Jim Jones benefited from his cult. Elon is becoming richer by the day. Matter of fact, he's now the fourth richest person on the planet. And of course, when he goes to Mars, he will be the richest person in Mars. Thanks, of course, to the useful idiots of his cults who are stampeding to buy Tesla due to the split. And don't tell me, oh, Tesla or Elon made me money. I made money. You haven't made money unless you click and press the cha-ching button. If you don't press the cha-ching button, you're also gonna take the ride to the downside. And the ride to the downside comes in the form of the elevator down. Of course, Tesla takes the rocket ship up, so that elevator is gonna turn to something even more volatile and faster. It is not how much you made, it is how much you're gonna keep at the end. I released this tweet, of course, saying of younger guys telling me that scared money doesn't make money and you should buy Tesla now because I made 80%, I'm up 100%, 120%. You haven't made anything unless you press the sell button. This is an important lesson and some guys are gonna learn it the hard way. And of course, we have insiders dumping stocks, dumping over 50 billion bucks, while of course the gambling crowd buys the dump and continue to push the market to all-times high. Case in point, Netflix CEO Ted Sarandos dumped over 100 million bucks worth of shares since late July. And what about the TikTok saga? We have a new entrance here from Oracle. Oracle all of a sudden is interested in TikTok. Why the hell is Oracle interested in TikTok? The only thing that I can find out is, of course, their ties with the CIA and TikTok having all these info that they collected from America's teenagers. It's getting really creepy and it's getting very, very weird. If Jeffrey Epstein was alive, you bet he's gonna raise his hand and try to buy TikTok too. Let's go to the mania. The mania in the stock market. The S&P 500 forward PE ratio is now surpassing the dot-com bubble. We are in the biggest bubble ever, ladies and gentlemen. The biggest bubble ever made in the stock market. Another sign of the mania, of course, Tesla yesterday made over 30 billion in market cap in one day alone. 30 billion, over 30 billion actually. When you compare that to Ford's valuation, which is at 27 billion, Tesla created an entire company Ford in terms of value yesterday alone. And now Tesla worth over 13 Fords, even though Ford makes 6 times the revenue that Tesla made last year. The mania continues. What about Robinhood? The venue where all the mania is happening. Robinhood is now valued more than MGM and Wynn Resorts, the gambling casinos combined. The gambling shifted from casinos into Robinhood. And now, shifting to the heat map analysis, of course, right away you see that the breadth is really, really bad. For us to reach all-times high on such breadth, meaning that it's only a handful of names you can see right in front of you. Amazon, Google, and a bunch of software stocks like CRM, Salesforce, Adobe led us to all times high. The rest of the market is pretty much muted. This is unhealthy and it's very reminiscent of the dot-com bubble. Let's track the rotation. Today was a garbage stock day again. The tech stock outperforming the comeback stocks, yet we're seeing the air coming out of the bubble from the comeback stock. The comeback stocks had a pretty good couple of weeks, and we wanted to see a little bit of a sell-off to take an opportunity and open positions in the comeback stocks. Yet we also want to see the comeback stocks rebounding and asserting the rotation, because if they continue to flatter and to fall down, this is not going to be a very good signal for the rotation. You know that at the end of the day, the rotation depends on the vaccine, which is coming before the election, guaranteed. Trump is going to play dirty. He's not going to delay the vaccine out of the goodness of his heart. He is going to release the vaccine before the election. Whether the vaccine works or not, that is a different subject. The market will react to the psychology of the release of the vaccine. This is why we're starting to nibble in stocks of the comeback sector, the laggard sector. Case in point, today I opened a position in Planet Fitness and American Express. Small, very small positions. And of course, we have to track the rotation. We need a little bit of a sign of a rebound from the comeback stocks during this week to confirm the rotation and track it accordingly. You see some names outperformed in the comeback stocks. Of course, Mondelez. Mondelez is not a garbage stock to begin with, but it is down year to date, or at least was down year to date at the time when we picked it among these names. If you've been following me for a while, you know that my third largest positioning is in Mondelez, and that is a direct bid against the US dollar. As the dollar goes down and decline, Mondelez will benefit from that decline. You see Mondelez rallying today due to the decline in the US dollar. And shifting to the technical analysis, the charts analysis, here is a chart of the SPX. And as you can see, all times high. Right there, right in front of you. We broke it. We made it. Let's jump in and buy stocks right now, all of us. Not so fast, because you have to look at the weekly chart, and we have to close the weekly chart above all times high. You don't want to see that prank where you close above all times highs from a daily perspective, and then what do you know? The weekly chart closes in the red and reverses, and that is not a good signal or a good ending for this close. Now, let's shift to the triple Qs, see what the triple Qs are doing from a daily perspective. Here we go. The trend is still intact, but we are diverging a little higher here. So expect, of course, a little bit of a pullback coming soon to touch the trend line. We are not ready to be bearish on the Qs and shorting again. Of course, I have a little short position, but I could short a little more if we break the trend line. And of course, my other condition is for the weekly chart, the MACD to cross the blue line. That hasn't happened yet, so we're waiting for that. And for now, the Qs are still intact. Let's take a look at the dollar index. Here's another chart that was very important today. And you can see here that the dollar, of course, as we predicted and as the bears predicted, broke the support. And now the bear flag channel is playing to the downside. Where is the next goal and the next stop? Of course, here it is, the 2018 lows. Very bad look, by the way, for the US dollar. Dropping under 90 would be a disaster for the US dollar, and you bet it will have a lot of implications for the stock market. Now, I want to show you one thing here. Let's compare the dollar index with copper. Let's see what copper futures are looking right now. There's a point to illustrate. And now, of course, when we start scrolling back, let's go to the weekly chart instead. Here it is. And as you can see, if we scroll right here, as the dollar started to rally, copper trended lower. And as the dollar starting to trend lower, copper is trading higher. And if we continue to see more pain for the dollar, copper will catch a major rally. This is why I'm invested in Freeport McMurray. And now let's switch, of course, to the Tesla chart. Here we go. Tesla from a daily perspective, switching to daily. And we have the spin look. Of course, some people call it a doji, which is a sign of indecision. Stock goes up, it goes down, it closes flat where it started. Looking at the 15-minute chart, here it is. We saw a big dump here early in the morning. I'm assuming it's Kimball Musk, of course. It's very nice to have a rich older brother that you can make money from and act like a parasite, dumping stocks and making cash from his hard work. And of course, in this case, it wasn't hard work. It was the stampede of amateur traders chasing the stock split. But now we have this formation of the swoosh, a breakdown. We tried to challenge it right here. We failed. And now we're trying to gather some energy, maybe give it another shot tomorrow. And if we fail again, you could see a sell-off and some traders, of course, taking some profits off the table. And what about gold? Gold, here it is, a daily chart of gold, and you see the breakdown candle and the rally. Of course, we're going to have to stop at the higher end of this candle and reflect. It will be a resistance point right here at the top of this candle. So be careful. If you bought right here, you might want to take some profits off the table when we reach at the top end of this candle. Take the dip and then buy again. And of course, don't forget that we have some important earnings coming up for the rest of the week. Notably, we have tomorrow Lowe's, Target, we have Nvidia, and I have a options trade for Nvidia. It's a bearish trade, a put, and it goes as the following. Of course, I released it in a tweet, and here it is. I am buying the 440 put expiring September 11th, and I am selling the 400 put expiring September 11th, and also selling the put for $440 expiring this week. All in all, my entry price is $389 or $3.89 per option. Now, what you want from this trade is you want Nvidia to decline after earnings, but you don't want the decline to be so severe, meaning not over 10%, because you want the 440 strike that you sold expiring this week to expire worthless, and then you want to see the stock trending down thereafter. Now, if this works and the stock continues to, say the stock closes at 450 by the end of the week, that is good because the 440 put will expire worthless, and now you only have your put spread for September 11th. And what you do is you sell puts under 440 for next week and the week after, because you have a 2 weeks gap before the week of September 11th. That would allow you to raise more money from selling puts under 440 and lowering your entry price further. So let's say that the stock closes to 450 by the end of the week, and then next week it drops to about 440. During that week, we will sell the put of 425, for example, raising cash from that put, and that would expire worthless. Next week, we sell the 420. That will expire worthless. Of course, this is in the ideal scenario. And then we go to the week of September 11th. Your entry price right now got reduced as much as possible. And let's say that Nvidia closes the week of September 11th at the price of 440, or excuse me, 400. What happens here is your maximum gains are going to be $40 per option or $4,000 per contract. If the stock drops anywhere under 440, that is your cap. You're not going to make any more gains than $4,000 per contract, because the 440 put that you sold will appreciate as well, and you need to close it. I know this is a complicated trade, but the goal from it here is to see a decline in Nvidia, not more than 10% this week, and you see a continuation of the sell-off for the next 3 weeks. And the goal, of course, is by September 11th, you want to see Nvidia stock price under 440, but not under 400. Again, it is worth the risk for $389 entry price. Of course, if Nvidia rallies after earnings, this trade will scramble. However, you still have 2 more weeks for whatever event that will happen and hit the stock after earnings. You're still going to have some money left. This is the risk versus reward from this trade. And now let's conclude this video. We have, of course, the all-times high, the celebration, the party goes on. And of course, when we reach all-times high, here is what's going to happen. Expect media scrutiny, meaning the CNNs of the world and all the media personalities on Twitter, all the newspapers, and now going to start asking questions. How the hell did the stock market reach all-time high when we have all the destruction and the unemployment and the decimation of small businesses happening in the real economy? They will come to the conclusion of the Fed. Expect the issue of the Fed to be raised and get political. The Democrats will start blaming the Fed and calling them biased and trying to favor the Trump re-election campaign by pumping up the stock market. The scrutiny will be very negative for the stock market. The other psychological fact right here is right now we're running out of goals. There are no more goals and milestones to reach. First, we had the resistance line. We defeated the resistance line. Then we had the gap. We defeated the gap. Then we had all-time highs. We defeated all-time highs. What is the next goal here psychologically and technically? There is no goal. The sky is the limit right now, or the reflection will take place, and a lot of people, specifically when professional traders start coming back into the market, they will reflect and say, look, the market is at all-time high, and we know that is not justified. This is a bubble, and of course, this is a risk that the Democrats will take over and raise taxes next year. When you have a combination of a bubble, all-time high, extended valuations, and you have a tax rate that you can book right now, that is a very good motivator for these professional traders and professional wealth funds to push the sell button, book their profits while they're high, and lock in the low tax rate before the Democrats raise it next year. So the mania will come to an end, and we will look back at this period of the stock market, the craziest period ever in the stock market. We will remember the same way we remember the dot-com bubble. Certain names got us to all-time highs, and now they crashed, and it will take years and years and years before they ever reach those valuations again. And instead of the dot-com bros who inflated the bubble, we have the Robin Hoodiots who inflated the bubble, and now everything crashed on their heads and they lost all their money. All the bros and the Robin Hoodiots who are showing you the Robin Hood screen, telling you, look how much I made. They will show you the screen again and they will tell you, look how much I had and how much I lost right now. I turned 5 grand into 50 grand, 100 grand, 200 grand, and now I got nothing. You will see that story happening again. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.